This is Notepad. I'm your host, Ibrahim Sani. We continue with our 2022 market outlook. Very recently, Maybank Investment Bank or Maybank IB Research has published a paper talking about divergence of fortunes, macro recovery versus market lethargy. Here to unpack all of this is Maybank Investment Bank's Chief Economist, Suhaimi Ilias. Suhaimi, how are you, Suhaimi?
I'm fine, thank you, Ibrahim, and Happy New Year to you.
Happy New Year to you. I hope your New Year was fun. But you know, pejam celik. It's already 10th of January. More than a week have passed. But the story of how this year will shape up is going to still take place. But before we jump into what you think about the market outlook for 2022 is going to be, can you do a quick recap into 2021 and some of the key learnings that you felt needs to be shared before we jump into the 22 outlook?
Thanks, Ibrahim. So, what can I say about 2021? I think it's a kind of a underwhelming recovery from the pandemic triggered 2020 recession. That's not surprising, given the fact that the recovery process was bumpy and uneven. I think 2021 we also saw or went through the same situation of being in and out of lockdowns and containment measures, just like 2020. I guess one key factor that helped the economy to recuperate or recover last year, albeit, as I said, somewhat underwhelming, where we estimated the economy rebounded by around 3.8% after the contraction of 5.6% in 2020, is the fact that we had a global economic rebound. We estimated global economy expanded by 6% last year, by and large driven by major advanced economies, the like of US, Europe, which rebounded strongly thanks to the huge monetary and fiscal stimulus, as well as the fact that they were faster and earlier in terms of vaccination, and that enabled the economy to reopen. So we benefited mainly through the export channels. As we know, our performance of the export was very robust, covering both manufacturing and non-manufacturing, especially commodities. And in light of the very strong and high average commodity prices, especially our major commodity exports like crude oil and CPO. But having said that, our economy was also able to recover as we also engage in a sizable stimulus, especially from the sort of economic stimulus side of things, together with the maintenance of the record low interest rates by Bank Negara at 1.75%. And at the same time, I guess in particular, as we go into second half of 2021 towards year end of last year, we saw a very good progress in terms of vaccination, and that has enabled our economy to start seeing progressive opening that helps the economy to basically recover overall last year. But again, I think the key takeaway was what I see as a W-shaped GDP path on a quarterly basis in this episode of a crisis, as opposed to something that is akin to a U-shaped path in the wake of Asian financial crisis and a V-shaped path following the global financial crisis. So that W shape again is not surprising because of the in and out of lockdowns and containment measures.
All right, I understand the notion that it's an underwhelming growth, that you're expecting a W-shaped trajectory. But let's now talk about 22 outlook in terms of the Maybank House expectations. You guys have placed 6% GDP growth on the back of 3.8% growth last year estimated. You're also talking about this being contingent upon stronger reopening strategy by the government. Also, you are talking about the notion that we must no longer be closed, as you know, to use your own word, ins and outs of containment measures for the past 2 years. It seems like the 6.0% firmer GDP growth is contingent on a lot of factors. How do you think this is going to realize? Do you feel that there's so much risk at hand to a point where this 6.0 is actually a more optimistic figure, not a realistic one?
I think the 6% growth forecast certainly is contingent upon our critical assumption that we're going to see what I call a sustained opening of the economy, as opposed to what happened in the past 2 years. I'm kind of cautiously optimistic on this outlook on the basis of the fact that we are basically adopting a living with COVID-19 strategy, so to speak. And that has been enabled by the progress and success of our immunization. I think we have gone beyond providing vaccination for the adult, as in full vaccination. We have started to roll out vaccination for the adolescent, those aged between 12 and 17%. And we also have rolled out booster shots for the adults. And I just had mine last Saturday. So I guess that progress in vaccination, I think, is very important in ensuring that we will be able to have a sustained opening of the economy. And I think it is also very important because if we look at the statistics with regards to vaccination and against things like cases, death, hospitalization, ventilation, patient in ICU under COVID-19, we can see that inverse relationship between vaccination and all those statistics on COVID-19. I think that's very important indication to support sort of our ability to proceed this year under this living with COVID-19 strategy. Certainly, there's also, I think, indication from Minister of Health very recently that we are not going to be able and afford the kind of a China style zero COVID-19 tolerance policy that will generally means there will always be this intermittent lockdown, containment measures and disruption to the economy. So I think that's a very, very critical assumption that looks to be playing out well. I noted there's concern about the new variant Omicron, but again, when we look at the numbers globally, yes, cases are surging, infections are skyrocketing, so to speak, particularly in the northern hemisphere of the world. But again, you see that decoupling between infections and the severity of this variant in terms of hospitalization and death. And I think the critical element there is actually vaccination. So I think that's an important thing. Secondly, I think policies domestically remain pro-growth generally. We still expect Bank Negara to keep the overnight policy rate at current level for much of 2022. We only penciling in a 25 basis point increase in OPR in final quarter of this year. And there's only one MPC meeting in final quarter of this year, on 2nd, 3rd November 2022. And that's where we see Bank Negara would start to raise interest rate. That, of course, is contingent upon the domestic economic condition showing that indication, that signal, clear path towards sustained recovery going forward. And don't forget, Ibrahim, our fiscal policy remain expansionary. This is the third year of budget deficit to GDP ratio at 6% or more. And this is essentially underpinned by record government spending as well as the upsizing of the what you call COVID-19 fund.
Do you feel that macroeconomic policy is going to be taken as a backseat until and unless an election is being done? How do you see the political situation here work together in tandem with the economic recovery?
Yeah, I think that's probably one of the wild card for 2022 outlook. I do not deny the fact that one, I think, major overhang for the economy is the domestic political situation and what the implication on policies will be. So I guess on that note, we are not ruling out potential what you call a general election happening this year. Certainly, I think as far as the parties within the government, current government coalition did well in the states election recently. I think for that matter, since Sabah state election in December 2020 and then late last year with the state election in Melaka and Sarawak, they did well. And the drumbeat on, I think, general elections is getting louder. So I guess on that basis, it kind of support my notion earlier about continued pro-growth policies for much of 2022. I think overall, budget deficit remain, fiscal policy remain expansionary, monetary policy remain broadly accommodative. I think until late this year to support that recovery. And I think as far as government policies are concerned, I don't think there's going to do much that's going to rock the boat. But it does, I think, uh, led to the issue of, beyond 2022, if election happened this year, what kind of policies that the government going to put in place. So I think that's probably the one to watch. I mean, one thing that we are looking keenly now is, beyond 2022, the government has indicated their commitment to bring down budget deficit quite aggressively from current, 6+ % of GDP last 2 years and this year. So we are talking about less than 5% of GDP starting next year, en route to 3 to 3.5% by 2025. Not a long time. So I guess that's where it will be interesting to watch whether or not we're going to see this materialize. And even before election, for that matter, within the first half of this year, I'm kind of keenly waiting for the government, what you call medium-term revenue strategy that will outline what are the tax measures, revenue measures that the government are going to put in place to achieve those stated intention to achieve what you call fiscal consolidation over the next few years. Because I don't see much by way of room to cut spending. In fact, our looking at the medium-term fiscal projection, 12 Malaysia plan, even with the expiry of COVID-19 fund after this year, I mean, government expenditure trend continue to go up. So the only way to cut a budget deficit, consolidate the government fiscal position, as well as make sure the government debt to GDP ratio does not exceed current ceiling of 65%, is to increase revenue.
Can I ask a little bit more on this contingency that you put in? Bold management and organizational restructurings. You don't foresee that happening. So therefore, do you think that GLICs and GLICs, GLICs and GLCs are going to provide stronger corporate earnings at least for this year?
I think for this year, that's probably going to be somewhat challenging, particularly within the context of Cukai Makmur that is part of the Budget 22 tax measures. I think this will hurt not just manufacturing, but also sectors like banks and utilities, where, as we know, there's a fairly big, heavy concentration of GLCs in there. So I guess with that kind of scenario overall, I believe our equity research team is looking at earnings overall actually this year to contract, despite the fact that economy is actually going to grow relatively better in 2022 due to this implication from Cukai Makmur on corporate earnings. But I think next year, as Cukai Makmur is out of the way, we do expect corporate earnings to be better, and that will also to some extent involve the GLCs. However, I think from the longer term perspective of GLC reforms, I guess it's really is a function of what's going to happen following the outcome of the next election, and depending on whoever formed the government at that time, what kind of policy measures that they're going to put in place to undertake a reform of GLCs and GLICs, as well as whether or not there will be that continuation of the initiative that is put under Perkukuh.
Looking at other corporates outside of the GLC, GLIC realm, do you feel that they're going to project a better growth for this year, particularly with the domestic consumption rate slowly increasing following the reopening of the economy?
I think from that perspective of economy reopening, certainly, I think certain sectors will benefit. So we are talking about sectors like auto, healthcare, consumer, logistics. So these are the sectors that we believe will benefit in a way cyclically following the stronger recovery. Financial also will benefit, I think, on that basis. But we also, I think our equity research team is also encouraging investors to also look at sectors that also, or companies or corporates that have earnings that are derived from sort of external sources through their overseas investment and export activities. So the likes of tech, certainly features prominently here, and also to position for the kind of a longer term structural thing changes that's happening in the economy, particularly in relation to this commitment towards decarbonization, reducing emission, increasing the share of renewable energy mix within our total energy production. So sectors like renewable also are the one that we are basically putting forth for investors to look at for this years and beyond.
We did mention just now that budget deficit continues to be above 6% for this year. Do you think that there would be some plans involved by the current government to introduce plans that would be a little bit more contractionary for the years to come, to pare down not just the budget deficit but the increasing household income debt?
Yeah, I think as I mentioned, the key sort of policy lookout on fiscal side this year would be the medium-term revenue strategy, or MTRS, that I expect to be published sometime this year, potentially even within the first half of this year, to outline revenue measures to ensure sustainable revenue generation, review tax legislation, strengthen tax compliance, as well as to sort of modernize and improve the efficiency of revenue administration, to address current issues, namely the narrow tax base, the inefficiency of tax incentives, the issues of tax avoidance and evasion, as well as the untapped informal sector. I mean, if you look at it, budget 2022 tax measures to generate additional revenue, increase tax compliance, broaden the tax base, I think basically serves as a prelude of what to come over the next few years in terms of tax measures. And I guess on the radar that we need to kind of bear in mind are things like whether or not we're going to see the GST comeback, whether or not the government going to introduce new taxes in relation to all this commitment to COP26 to reduce emission, decarbonize the economy, such as carbon tax, whether or not the government is also going to jump on the global bandwagon in terms of the sort of a trend towards redistributive tax, that progressive redistributive tax, like capital gains tax. All these are some things that are the things that the government, I think, are looking at, studying over it to see what are the sort of a best step forward.
I need to pick your brain on this one. How realistic do you think the government is going to introduce policies that we need, like the GST, for instance, versus committing political suicide, like introducing GST? What's the reality of things here? Do you feel confident that the government is willing to do the right thing instead of the popular thing?
I think if you expect something to happen before election, certainly not. So I guess this is a question of things happening after the election, and
Mm.
of course, depending on the mandate as well, whether it's a strong mandate or not. Because obviously, what we have seen, regrettably, over the last few years is we have a government, but with a slim majority and a somewhat fractious and fragile coalition. I guess it's not really a kind of environment that can lead to bold measures going forward. But I also want to highlight the point that we do need to seriously look into tax system reform, among other things, because what's happening elsewhere within the region. So if you look at our corporate income tax rate, at 24% now, and of course for this year is when I guess more challenging in view of the additional sort of tax on corporate income due to Cukai Makmur. We are kind of pricing ourselves out of competition, making ourselves uncompetitive. At 24%, I believe our corporate income tax rate is actually the highest in ASEAN. And at the same time, we've seen our peers like Indonesia and Philippines, they have making move towards reducing the corporate income tax. And how this is possible is actually because they broaden then indirect taxation
Mm.
through interaction of VAT or increasing consumption tax and all that. So there is that reforms happening, and of course, not to mention there are also what I call broader economic and policy reforms, like in the case of Indonesia, the labor market reform. In the case of Philippines, the government putting in measures or bill to be approved by the lawmakers to open up sectors like utilities, retail, finance for greater foreign ownership and direct foreign direct investment. So I think we do need to look at it from that perspective. Ultimately, this can have positive impact to the issue of household income. That I think, and for that matter, to the situation of the high middle income trap that we are in at this point of time.
The unemployment figures have shot up from 3 point something percent to above 5%. It has come down since, but one thing that continues to remain high is youth unemployment. I do take note that the unemployment figure do capture a larger pool of a lot of people being unemployed across the board, across ages. But one thing that we also need to highlight is the skill-related underemployment, where people who are trained for a particular job is now being underemployed in a job that is not their training. Where do you feel the trajectory is going to be when it comes to unemployment, underemployment, especially skill-related underemployment?
I think even as we speak, we continue to see the situation where, in general, our unemployment rate, youth unemployment rate, underemployment rate remain elevated relative to immediate pre-COVID level years. Even if currently unemployment rate headline is 4.3%, I think it's still about one full percentage point higher than the average in the years before COVID-19 came. I think youth unemployment rate remain sticky at mid-teens. I think the latest figure is around 13.7%, not much different than the highs of 14+% that we had at the peak of the pandemic related recession in 2020. And of course, I think we are seeing a situation where underemployment, I think, is getting becoming a bit more worse. Earlier, I guess the issue is always graduates not being able to get a job that is commensurate with their so-called qualifications. But now we are seeing they are facing competition also for jobs from people who have lost the job, being retrenched, and fighting for what's available out there. So I guess this is the one perhaps challenge for the economy over the medium to long term. I call it part of the so-called scarring effect from a COVID-19 pandemic, the situation with regards, the sort of a less than optimal situation with regards to our job market situation. I think the government has done some things to, for example, prevent unemployment rate from going higher, as per the wage subsidies program to protect and preserve jobs, and that was followed by specific measures to particularly help what you call job job markets. Those people are looking for jobs in terms of training, hiring schemes, and so on. So this, I guess, is a solution for the next few years. Over the medium to longer term, I suppose, as mentioned earlier, we do need to have policies that are going to basically create a positive ecosystem for domestic direct investment and foreign direct investment that generate jobs. Also an ecosystem for, I believe, entrepreneurship, because certainly that's a source of employment creation going forward. Not to mention over the longer term, that concerning our education system.
Two more things. The second last thing I want to touch about is on inflation. Do you feel that rising consumer goods and rising inflation costs, specifically in areas like, for instance, education and healthcare, is going to rise, at least for this year?
I guess there is always further upside risk to inflation. I mean, admittedly, at this point in time, we are looking at inflation to be sort of persistent, 2.5% rate this year, the same as last year, after the deflation in 2020. And this 2.5% is certainly higher than the 2018, 2019 average of, I think, even less than 1% when we had
Yeah.
periods of disinflation. I think for last year and I think for last year, much of the inflation, I think, is driven by goods prices, as well as sort of related to commodity prices like food and energy. But with economic reopening this year, maybe the pressure points for prices will move towards services and away from goods. and we might also see some stabilization in commodity prices, even at high level. So that means on a year-to-year basis, there's not much by way of the kind of big jump that we saw in commodity prices in 2021 vis-a-vis 2020. But I would say what going to keep inflation persistent this year is the possibility of the pressure points on inflation move towards services as economy reopen on a broader basis.
That's the second last thing. The final thing that I want to touch to you about is basically the topic of your research paper, market lethargy. You argue that policy overhang plus macro risks continue to provide that letharginess. Do you feel that that is going to be the mood for this year?
Um, at this point of time, I think in tandem with the view of Anand, our head of equity research, I think that's probably the case potentially in the first half of this year, especially amid the policy and political overhang and the fact that, unfortunately, COVID-19 is still clouding, potentially clouding the recovery outlook.
But this is
But
despite vaccination rate being high and all this. You still see this as cloudy.
yes, I think because of the potential implication to global economy downside, and I think if you look at the statement made by central bank, for example, even if they are taking the view that economy will grow faster this year, but on balance, I think the risk is still tilted towards the downside. That's why we take the view that the policy will remain a commodity for much of this year. But we do expect, I think, sentiment to improve second half of this year as the cloud on COVID, I think, start to clear. And I think particularly market would start to have a better feel about 2023 outlook by then, especially with expectation that we have a clearer path for corporate earnings recovery after another disappointing year this year due to particularly the impact of Cukai Makmur on earnings.
I guess we have to get you back on second half of this year to actually do a double take on the kind of views that you have by then. But for now, that is our conversation with Suhaimi Ilias, the chief economist at Maybank Investment Bank. If you missed any part of this interview, just head on to astroawani.com, look for Notepad. You can also head over to Maybank Investment Bank's research website and type 2022 Market Outlook. Till then, thanks very much for watching and goodbye.